From Bloomberg's world headquarters in New York, I'm Scarlett Fu.
And I'm Tim Stedevec. Welcome to Bloomberg Crypto. It's a look at the people, transactions, and technology shaping the world of decentralized finance.
And when it comes to crypto, at least a lot of the talk this weekend centered on the debut of World Liberty Financial's token, a project endorsed by President Donald Trump and his family.
Today, we learned that the exchange led by the billionaire Winklevoss twins seeks to raise $317 million in its IPO. It's the latest crypto business in line for a U.S. listing.
And in just a moment, we speak to David Shamus, the founding partner of Bob Diamond's firm Atlas Merchant Capital. David is CEO of Hyperliquid Strategies, which is part of the digital asset treasury trend.
That's all ahead over the next half hour right here on Bloomberg Crypto. First, though, let's check out what's going on in the market. Look at this. You're actually seeing quite a bit of green here. Risk-off day for stocks and bonds. Not so for crypto. On the stocks and bond side, budget concerns in developed world countries resurfacing. But look at this. It's all good when it comes to at least these three cryptocurrencies. Bitcoin up 1.9%. We can round that up. Solana up 1.5%. Ether kind of moving between red and green today, but still up 0.3%. Remember, hit a new all-time high of around $4,800 per token just last week. Ether at $4,300 right now, Scarlett.
And let's take a look at a two-day chart here of the market cap of WLFI. This is the cryptocurrency tied to President Trump and his family. It's issued by World Liberty Financial, thus the name, the ticker. It began trading yesterday and can now be bought and sold on the open market like a listed company's share. Now, each token is worth about 30 cents, but the market cap comes out to about $6 billion. That would put it at about the 32nd or so biggest token by market cap. Tim?
Well, at the same time, this token debuts and makes money, at least on paper, for the Trump family. The administration continues its embrace of crypto. On Friday, SEC Commissioner Mark Ueda repeated the stance of welcoming digital assets.
The last 4 years in the Biden administration, we saw a lot of efforts to suppress crypto, at least in the United States. That was one of the things that the president did, I think it was the third day of his administration, January 23rd, when he issued that executive order with a clear goal. We need to make the United States one of the global leaders in innovation in crypto and digital assets.
All right, and of course, Mark Ueda there. Let's talk a little bit more about the crypto space and turn to digital asset strategy companies. Atlas Merchant Capital has just announced an $888 million deal to launch the Hype coin on the Hyperliquid exchange. David Shamus is founding partner and CIO of Atlas Merchant Capital. He's also the CEO of Hyperliquid Strategies. So that's a lot of words there, exchange strategies and a token. Put it into context for us. What does Hyperliquid Exchange do, and how does the Hyperliquid token fit in?
Here's the thing. The company is less than 3 years old, amazingly. Mm-hmm. It has never taken any outside money, no VC money, no private equity in it. It has 10 employees based in Singapore, and they're at a run rate of over $1 billion of free cash flow right now, or annual free cash flow, which is just an amazing thing. And it's also amazing how few people really know much about Hyperliquid. When we raised this capital to buy the token in a digital asset treasury company, we reached out to a lot of people. I spoke to two, very well-known crypto, personalities. People you guys would know by name, who I'm not going to mention on this show, who had never heard of it.
After the show, you'll tell us.
After the show, I'll tell you. Who had never heard about it.
Look, they're not alone. I'm not familiar with it.
So basically the way to describe it is an exchange like a Coinbase, but it's also its own layer one blockchain like Ethereum or like Bitcoin. And it has allowed them to build an exchange that is very sleek, that is very efficient, that you can trade really efficiently with a lot of liquidity on, but it also has allowed them to create an ecosystem that others can build on top of it. So Phantom, the crypto wallet, recently started allowing perps, which are known as perpetual futures, very popular in the crypto world, allowed perps trading on their app. Instead of building it themselves, which is a huge, complicated thing to do, they literally just linked into Hyperliquid's exchange, the system. There's a revenue sharing thing that's already pre-agreed, and now Phantom's in the business like that.
Why is this the right horse to bet on, though, in this space? Because, like you said, there's no shortage of options out there. The others, at this point, like you mentioned, are more popular, are more well-known. What's to say that there actually is room for this entrant?
Well, I think I like betting on things that are less well-known and less popular before they become better known. To me, that's the right strategy. I actually think Bitcoin is still a perfectly good buy today. There's still room to go, in my opinion. But, we've seen a lot of growth in Bitcoin. I think this has a long way to go, the Hyperliquid token. The other thing about it is not easily owned in the United States. So the only place the Hyperliquid token trades right now is on their own exchange. The Hyperliquid exchange is not currently available to U.S. people.
Why is that an advantage and not a drawback?
Well, it's an advantage because we're creating a digital asset treasury company that is available to U.S. people, right? We're going to trade on the NASDAQ like anything else. You can buy it in your Fidelity account or your Robinhood account or whatever, whereas buying the token is a lot more complicated. Whereas, if you wanted to buy Bitcoin tomorrow, that's no problem. You can buy Bitcoin on lots of different ways sitting right here in New York.
Is this a token that's on the radar of regulators right now? We spent a lot of time over the last few months talking about crypto czar David Sachs, for example, and what is on his radar, the legislation that President Trump has signed into law when it comes to digital assets. Is this on the radar of folks in Washington?
I don't know.
Should it? Does it concern you if you don't even know if it is?
Well, I have not heard much of this bubbling to the level of Washington being super focused on it. And I think that on one hand, it's a top 10 coin. On the other hand, it's on the lower end of that range. And I think that there's nothing happening here that's particularly controversial. It's a coin like a lot of other ones, but it's just one associated with an exchange that we think is growing really quickly and really profitably and in a really exciting way.
Is there a use case for this coin?
Well, the use case for the coin is that the exchange that generates all this revenue and free cash flow buys back the coin on a regular basis. Like, when I say regular basis, I mean literally every day. They have something called the assistance fund that's part of the exchange. And something like 97% of their free cash flow they use to buy back the coin.
Plowed back into it.
Exactly. So unlike Bitcoin or ETH, where there's no obvious user out there sort of burning the coin on a regular basis, here you have a tremendous amount of the free cash flow, the vast majority of the free cash flow going to buy back the coin.
Will that remain like that in perpetuity?
I expect it to. Absolutely.
Because if it doesn't, then what happens to the price?
Well, obviously, if there's less buyers out there and more sellers, we know what happens to price generally. But we think if you look at August was the #1 best month Hyperliquid ever had. The second best month was July, et cetera. Like, we see a growth trajectory here that's really exciting. Recently, a very large, as they call them, OG Bitcoin owner, we don't know who it is, but a large Bitcoin owner decided he wanted to sell a tremendous amount of Bitcoin and move it into ETH. That person could have picked any number of exchanges to go to. He went to Hyperliquid. Or maybe she, we don't know who it was. We thought that was pretty interesting. I think a year ago, or maybe even 6 months ago, that probably wouldn't have happened. But the Hyperliquid community was pretty thrilled that OG chose Hyperliquid to sell and buy.
So you contrast what happened today with a year ago. Where do you see things headed in 6 months and 1 year from now?
I just think that as this continues to grow, as more people learn about it as a really good place to trade, as more partners come on board, like Phantom, as I talked about before, that can link into the ecosystem. They've done their partnership in a really smart way. It's known as permissionless, right? So if you're going to partner with Coinbase, if you're XYZ company, you got to go meet Brian Armstrong. You got to have meetings. You got to make deals. You got to get lawyers involved. Like, it's a big, complicated thing. Here, it's permissionless. They load in how you link into their system. There's a few lines of code you put in, and you're in. Bang. It's just a really smart, ingenious way to run
Frictionless.
Frictionless. That's a good way to say it.
David, good to see you. Come back and hang out with us again soon.
Good to be here. Thanks.
That's David Seamus, founding partner and CIO of Atlas Merchant Capital, also CEO of Hyperliquid Strategies. Well, speaking of tokens, let's get back to that World Liberty Financial token debut yesterday. Monique Malima has been covering the story for Bloomberg News. She joins us from Toronto. Monique, I was pretty shocked earlier to read a story about this specific token and the trading that debuted yesterday and find out the Trump family's net worth has been eclipsed. Their real estate holdings have been eclipsed by the value of their crypto holdings. How has this token played into that?
Hi. So yes, like you mentioned, the Trump family is involved with World Liberty Financial. Both Donald Trump Jr. and Eric Trump are co-founders of this company. It has its own stable coin as well as this cryptocurrency that, like you mentioned, started trading yesterday. And the family also gets a certain percent of revenue from World Liberty Financial. So they've seen a big growth from this. Like you mentioned, it rose yesterday, but today it is now down a little. But still with that, this is a token that now has a market cap of near $6 billion. So this is going to be a big boost for the Trump family.
Is there a use case for this token, Monique?
So this token is used within the World Liberty Financial blockchain, and then it also interacts as well with their USD1 stablecoin. And then we also now know as well that there's going to be a treasury company, which World Liberty Financial and the Trump brothers are involved in, that is Alt 5 Sigma, which is going to be it was a biotech company, then a fintech company, and now it's holding this crypto treasury of World Liberty Financial tokens that will hold about 1.5 billion. So they'll be holding vehicles as well as people who are just trading it to be able to use it on the blockchain.
And the president's involvement or Steve Witkoff's involvement, what do we know about their involvement right now? How are they listed?
So the president is not directly involved in the day-to-day, obviously, of the company. All of the Trump family members, including the president himself, do get a certain percent after the company reached certain targets, which they've already met. So they do get some revenue from it. It's, from what we know, being held independently in a blind trust. So the president's not directly involved, but his sons are co-founders and very much involved with this company. And similar with the Witkoff, Steve Witkoff's son is also involved in this company.
Okay, fantastic context there, Monique. I got to ask you, since we're talking about the Trump administration, there's been a rush of crypto listings as this White House embraces the industry overall. And Gemini Space Station is the latest one. It's the cryptocurrency exchange led by the Winklevoss twins. What can you tell us about the upcoming IPO?
So the Winklevoss twins launched their IPO for Gemini today. They're seeking to raise about $317 million through this IPO, listing about 16.7 million shares at a price of $17 to $19 per share. This is a crypto company that kind of does a bit of everything. They have a crypto exchange, they offer staking, they offer a stable coin, a credit card with crypto rewards, and they're, like you mentioned, kind of just one of the latest of the crypto companies to do these types of offerings. We've seen Circle and Bullish over the past couple months, both in the crypto space, having large IPOs that really jumped once they started trading. So I'm sure that Gemini is hoping for something similar.
Monique Molema joining us from Toronto. Thank you so much. Hope to see you again on Bloomberg Crypto soon. Coming up, Tim, we've got a lot more.
Yeah, we're going to speak with Rebecca Rettig. She's from Jito Labs as the U.S. puts GDP data on the blockchain. Also, to access all the latest data and news on crypto, just check out CRYP Go on the terminal. This is Bloomberg.
Solana is basically faster and more designed for high processing speed. And so, frankly, when I saw the big debate come out about stablecoins being all built on ETH, I was like, this is a huge oversight. I think Solana is actually the story for the future as far as stablecoins go.
There you have it. Rex Financial CEO Greg King speaking on Bloomberg ETF IQ last week. Joining us now for more on Solana and blockchain is Rebecca Rettig, Chief Legal Officer of Jito Labs. It helps develop advanced blockchain infrastructure for Solana. Rebecca, we wanted you on because, well, for a few reasons, but I wanted to talk to you specifically about something that happened late last week. The U.S. government began posting GDP data on public blockchains, including Bitcoin, Ethereum, Solana, and Tron, among others. Did anything change about this data as a result of being posted on these blockchains?
I think it did change, actually. The data itself didn't change, but the verifiability and the usability of it did change in terms of we now have an ability to stream this type of data into all sorts of different applications. People can go back many years and see and verify it and look at its accuracy. And so I don't think the underlying data has changed, but the nature of the data has changed. And that's one of the critical features of blockchain generally. I think it also helps facilitate what we think of as internet capital markets, where we're really bringing finance on chain in a much more robust way. And this is another step towards doing that.
It certainly increases access to this data. The data is always available on the government's website, and if you have a Bloomberg terminal and are a Bloomberg customer, you can certainly access it there. But talk a little bit about what that means for folks who are using decentralized platforms, that they now have access to this data.
They do, and there are features called oracles, which takes off-chain data and basically makes it able to, as you said, stream it into these new digital types of financial applications. And so there are two different oracles, one called Pith, one called Chainlink, that actually has taken the data and has made it streamable into decentralized finance applications. And so this is really going to be able to be used in a much more robust and distributed way.
I'm wondering about trust, and specifically when it comes to trust of this data. It kind of takes on a new meaning after what I think a lot of people have experienced over the past few months, specifically just a few weeks ago when we heard the president fire the head of the Bureau of Labor Statistics after that jobs report that he didn't like for the month of July, Rebecca. In terms of trust in a world where I think people are questioning government data, because they're hearing that it's questionable from the highest sources in government, the president himself. In your view, does this do anything for trust of government data?
I think I don't know if it does, but it certainly should, because if you actually look at the press release from the Commerce Department, it talks about a very specific type of technological, what they call hash, but it is a type of way to cryptographically ensure the verifiability of the data. That was a lot of very technical words, but what it basically means is it is really a way to audit and verify that the data is correct and to put it onto the blockchain in an immutable way. So it can't be changed, it can't be tampered with, and it can be seen in perpetuity from the time that it was put on the blockchain. So you can go 10, 20, 50 years from now and still see the same hash with the same information in a totally tamper-resistant way.
Okay, so that provides confidence to folks who may not have full faith in the data as it's being distributed, as Tim was just explaining to us, particularly if the data is not aligned with the current administration's thinking. If you take a step back, Rebecca, what does it mean that the government, the Commerce Department, is making data like GDP available on these platforms, on these public blockchains?
That's a great question. And I would say that there are governments around the world who have actually been using various types of blockchain applications or blockchains themselves for different parts of the government. The EU has been experimenting in putting certain types of intellectual property records on blockchains or postal type of information on blockchains. Same has happened in Singapore. There have been various types of sandboxes. And so this is the US really keeping up with the pace of technology and making sure not just that the US is the crypto capital of the world, as the president has said a number of times, but also that the US is really staying abreast of where the economy is going and ensuring that the way that the Commerce Department works is in line with the way that the rest of the economy works.
So it's hugely symbolic from that point of view. All right, Rebecca, really appreciate your joining us. Rebecca Rettig of Shido Labs. Thank you so much. Now, coming up on Bloomberg Crypto, credit cards versus stablecoins. More on the competition for cheaper and faster payments. Will crypto disrupt the credit card space? This is Bloomberg. Retailers like Amazon and Walmart are exploring how to create their own stablecoins. So our next guest says that credit card companies should be worried, as these stablecoins could be the new way customers get rewards points. Bloomberg opinion columnist Paul Davies joins us now live in London. So, Paul, make the case for why credit card companies face this threat from stablecoins.
Well, thanks for having me, Scarlett. So it's basically, I'm quite skeptical about the growth of stablecoins in general, particularly as a place where you store cash. But as a payment technology, they're much more interesting just because they are fast, cheap, and all the rest of it. And the thing with credit cards is they still earn very high swipe fees in the US compared to almost every other market. I mean, there's been Senator Richard Durbin has been campaigning against this for years already, but they're still like 1.5% to 3% on sort of all transactions. That's great if you really are into credit card rewards points. And if you do very well at collecting them and clearing your balance quickly and spending them well, some people really benefit from it. But a lot of people, they don't really get the benefits of the rewards, and the retailers just end up paying the transaction costs, which you don't get with stablecoins. Now, stablecoins as well can offer rewards, because they can't offer interest on the treasuries and stuff that they hold to back their value. But there is a kind of a rewards option in there.
Well, Paul,
so I think it could be quite a good challenge.
Yeah, talk a little bit about the buy-in that you would need to see from consumers to do this, because I think consumers, when we swipe a credit card, we don't think of the interchange fee. We don't think of the transaction fee. That's completely on the retailer, the merchant, where we're buying whatever good or service. So what's the buy-in that you have to get from a consumer to change their behavior?
Yeah, absolutely. I mean, you're going to have to make this as seamless and as kind of almost unnoticeable as possible. I mean, there's a big difference between credit cards and stablecoins in the sense that you're going to have to preload your account to spend, whereas a credit card, you can clear the balance at the end of the month. Credit cards also you can use for borrowing, but if a retailer could combine with a stablecoin issuer and a buy now pay later company, then perhaps you could kind of square off all of those things. But ultimately the way it's going to work is if the yield that the stablecoin issuers can make and share with the retailer is significantly more than the cost of transaction fees and what credit card companies can offer, then maybe the rewards will be greater, and maybe that's what will draw consumers in.
Paul, very quickly here, you cover banks, you write about banks often. How do they fit into all of this?
Well, they're going to be watching this very closely. I mean, retailers can't issue their own coins. Non-financial companies can't do that. So they'll need to partner with somebody like Circle, that runs USDC, are obviously looking at this. But, you can bet that banks like JP Morgan, Bank of America, the other big card companies are going to be keeping a very close eye on developments here and trying to find their own way to do sort of partnerships with, the Amazons, Walmarts, American Airlines of the world.
Yeah, I guess if you can make it more enticing for consumers, then you get some of them over there and change their behavior for those deals. Paul Davies of Bloomberg Opinion, thanks so much. Check out his column on the Bloomberg Terminal, OPIN Go, and at Bloomberg.com/opinion. That is going to do it for Bloomberg Crypto. Join us again next week. We'll be back same time, same place. This is Bloomberg.